Hi. Oof. Hi, and a very well, shall I say good morning, good afternoon, or good evening? Because I see we have lots of people, not just from the UK and Ireland, but in New Zealand, Australia, France, Hungary, Canada, and USA. So good morning, good afternoon, good evening, and welcome to why Signature Credit Recoupment is only possible via a foreign grantor trust. First, let me introduce myself. If this is your first time attending one of our presentations, my name is Simone and I'm head of the Advocate Network. Now, I can see there's quite a few of you. There's lots of questions all coming through as well. So just a few things to go through. Thank you for your questions upon registration. They will be answered on a separate session with our speaker, who I'll be introducing shortly, and Andy Benson, who's head of Ross Media. Okay. However, there are also additional information that we will be sharing after the webinar as well. So there are handouts that will be sent to you a couple of minutes after this presentation finished to complement today's webinar as well. We'll also have polls, so it's always good to have some feedback from you guys as well. Now, if you notice on your dashboard, we have a chat and we have another section called Q&A. I think that's pretty obvious, right? So any addition questions you have that you want Andy to ask our speaker today, then add it in that Q&A section as well. And we'll get that answered. And that should be done probably early next Tuesday or Wednesday. There are also additional links which are useful reference to, well, one, especially going to the Ross Media platform, because a lot of additional questions, lots of information is all there, lots of interviews, any additional updates, everything is there as well. So are we ready? So let me introduce you to our speaker. He is the founder and the president of Republic of Old Souls. It's Ian Clifford. Good day, Ian. How are you today?
I'm feeling very good. Good day, everybody. If you haven't been on one of these webinars before, I've been the last few webinars that I've done. I do one every Saturday. I've just been explaining that if you are going on to the internet and you're putting in my name or you're putting in anything connected to me, just about anything, you're going to be bombarded with propaganda that's been put up there by the British establishment. I've been in a war with the British establishment for over 16 years. There is a website which is called iancliffordwhistleblower.is, which documents what's going on. What they tend to do is with people like me that are disruptive, i.e. I identify where weaknesses are in the slave system. I bring, I do a lot of financial engineering. I've done it all my career. If it challenges the status quo, which my programs and processes tend to, they try and undermine my reputation. They've been doing this for 16 years. If that doesn't work, they try and destroy all your ventures and freeze all your bank accounts. Well, they've tried that and that hasn't worked. The last thing they do is they try and jail you, and they've tried that twice. At the moment, I'm in constructive exile in North Cyprus, not as a fugitive, but as because of the fact that my situation is very political. I'm like a political exile. Just last week, I filed some very heavyweight documents on the UK Court of Appeal because the sentence that I'm supposed to be serving is a void nullity. I also serve some things on our Telegram channel in relation to it. So if you are going on AI or if you are going on any kind of internet search about me, you're going to be bombarded with propaganda. All I'll say is this, the overwhelming majority of the attendees of these webinars and members of the Republic of Old Souls see me for who I really am, and that is a problem solver. That's a guy who's building a freedom nation. That's a guy who doesn't get afraid by taking on the complex problems of the world. And we get hundreds of very, very positive testimonials all the time. So if you are concerned about what the internet says, if you're concerned about what AI may tell you about me, then you're probably on the wrong webinar. Because if you believe the propaganda, you're probably never going to be free of the control agenda. It's part of the control agenda is bombarding everyone with propaganda. So I won't say any more. If you're interested in knowing more about it, then have a look at Ian Clifford Whistleblower.is, and it's all documented on there. Today we're going to go through a subject which, for me in 2024, when I came across the Foreign Grantor Trust, as a way of using an entity to file 1099 OID, which all of this will become clear as we go through. When I recognised and realised that the Foreign Grantor Trust could operate as a completely separate player piece on the Monopoly board, and it could legitimately take up the position of something called holder in due course. Again, we'll come back to this later on in this webinar. It was, to me, it was like, it was a major eureka moment for me because it answered so many questions. And I remember the day that I triangulated and joined the dots up, and then knew that that was a massive game changer for our membership. Very few people have ever understood why I was so excited to have discovered this this pathway for our membership. Today I'm going to explain a bit more about it, plus some other things as well. So that's our roadmap. And if you are interested in more technical information, I've just done an interview with Andy Benson on the ROS Media channel. During the last week, I published a treatise on signature credit tax redirection, which is what we're actually talking about today. You can find it on the Ecclesia Law Institute. You can also find it on our Telegram channel, our main Playing Monopoly Telegram channel. And I think it's a handout as well, isn't it, Sims, on today? I think it's in the handout. So
just so you know, everyone will be receiving
able to read it.
I was going to say, sorry, there will be an automated email going out with including handouts, and the handouts will also be on the platform as well in the next few days.
Brilliant. So if you're into technical, if you're into how do things work and why do they work, it's all in my treatise, which I think will be read by a lot of people, because there's a lot of people out there who've shown, you know, deep interest in the technical side. And I think if you're one of those, you're going to like the treatise if you haven't already read that document. And if you're not a reader, then go on the ROS Media channel and play the interview, which I did with Andy Benson a few days ago. And it will answer a lot more questions, I'm sure, that you may have. Next slide, please. So everything that we're doing in this world monopoly game of commerce starts with how the game really was set up against us, how we were all deceived right from the first moment when we entered this realm. Bless them, our mum and dad registered a birth certificate, and they didn't know, I'm sure, that was a very, very significant event in our lives. They probably had their birth certificate registered as well, so it wasn't anything unusual, and they probably were put under pressure to do it because that's what the state wants. Now, there's a very good reason why birth certificates are registered. it's not just because they're keeping a record of newborn babies. It's really nothing to do with that. It is all to do with what I call the agency trap. So here you are, a living, breathing soul, a newborn baby, and you were once connected to the placenta. The placenta is separated. They take the placenta in the hospital normally, and they register the placenta, and it becomes, that entity that they're registering becomes a decedent estate. And it's got a DNA link to the newborn baby. So what you've got is you've got this biological linkage, which is the DNA linkage, but you've also got the fact that the birth certificate has been registered, and that forms an estate or a trust. And if you are if you're into trust law, if you're into probate, then the birth certificate construct is a very, very important event that happens, because not only does it form a decedent estate, but that decedent estate is represented by the living soul, by the baby that later on becomes an adult. And the living adult, when the adult comes of age, 18 or 21, takes up two positions. The first position is what's called the executor de son tort, which is the executor of the decedent estate, this placenta registered estate or trust, if you like. And the living man, woman, the living soul, takes up the position of the executor de son tort, which means the executor of all the wrongs. Because every time that the living soul holds itself out or represents that it is the birth certificate construct by using the name as if that name belonged to the living man or woman, the living soul, that is a fraud. It's an identification fraud. And that means that the living soul is operating as the executor de son tort, the executor over, that's kind of policing, if you like, or being responsible for the birth certificate construct, but doing it in fraud, which is why it's executor de son tort, which means the wrongs, all the wrongs. That's the first problem. The second problem is the agency. The living soul is now firmly the agent for the birth certificate construct. The birth certificate construct is artificial, remember. It is an estate. You can't talk to it. You can't call it on the phone. You definitely can't take it out for dinner. And you shouldn't be using it as any form of identification. It simply isn't you. What is it, you may be thinking? Well, it's a player piece that sits on the artificial monopoly board. So the living soul is not on the monopoly board. The artificial construct, the birth certificate construct, this decedent estate, is the player piece that is going to be playing the game of monopoly with all the other artificial constructs on the monopoly board. So if you can position it in your mind that you are a living soul, you are not on the monopoly board, but you are the agent for the birth certificate construct, which is playing the game of monopoly. That game of monopoly is a worldwide game. The game of monopoly is a trust. We'll come back to a bit more detail about it in a moment. But basically, it's a world monopoly board, a world trust that every decedent estate is sitting on as a player piece. And all of the governments, all of the companies, all of these decedent estates, the birth certificate constructs, are all on this worldwide monopoly board. It's a one world game. It's not separated by countries. It is all joined together on one great big monopoly board. If you get the flat Earth map out and look at the world and then imagine that's a monopoly board, that is what's going on. It's not separated by countries. Birth registrations are centrally recorded, and there's a very good reason why, another very good reason why the birth certificate construct has been registered, because they securitize the energy of the living soul through the birth certificate. They register the birth certificate. It's theirs because they've registered it to the state. It therefore is controlled ultimately by the state, and they're using it as a conduit. They're using it as a mechanism, as a player piece that sits on this artificial monopoly board and transmits human energy from the living souls onto this artificial monopoly board. They trap you with the agency. They enslave you with transferring your energy onto the monopoly board. But the good news is, if you stick around on this webinar, I'll show you how to win the game of Monopoly. Next slide.
Ian, whilst I'm going to the next slide, just to let you know, there was some chatter coming through saying your voice was a little bit tinny, if there was something to do with the internet. So just to make you aware, that's all. So I'm responding to everybody, but just to let you know, that was all. So I might have to say, can you repeat that again, just in case? All right.
It's possible the internet it's a bit variable, the speed here sometimes. So it could be that. Hopefully it will improve. If it doesn't, then I can try and adjust something. But let me know if it's still a problem.
I don't want to interrupt you. If I sort of go like that, I'll give you a sign like that.
Right. Yeah.
Okay. But everyone, I've got a message. Better now. I don't want to interrupt you while you're in your flow. So if I just go like that, you know, that's it's a little bit. Anyway, I'm on to the next. I'm on to the next slide for you.
No worries. So I mentioned just now about a worldwide trust, and that really is the monopoly board itself. Well, in order to bring in a modern slavery system, those that control the World Monopoly Board, they had to make the entire Monopoly Board bankrupt. And that actually happened on June the 5th, 1933. The United States, as a corporate entity, a corporate government, as all governments are, was entered into Chapter 11 bankruptcy in 1933, in June 5th, 1933. What had happened was they had created this boom in the economy in the 1920s, and then they had to crash the world economy, and they did that with the Great Depression of the early 1930s, and that enabled them to bring in, that's the bloodline banking families who wanted to bring in basically a modern slavery system that was so sophisticated that only 1 in a million would ever figure out what's going on. And that's a quote from a guy called Mandel House, which you can look up on the internet. And when he was talking to Woodrow Wilson, who was the president at the time, he said that only 1 in a million will figure out this system. And I think he's about right. So the original creditors, the bloodline banking families that we all know the names of, the Rothschilds, the Rockefellers, the Astors, etc., they bailed out the United States government or the United States as a state itself, and put the United States into a permanent bankruptcy, and it's still permanently bankrupt today. So people think it may be a solvent nation. It's not. It's all operating in bankruptcy. And gradually over the next 20 odd years, the rest of the world, all being artificial constructs, all of these governments, all of these countries also entered into bankruptcy. The majority in 1944, which was the Bretton Woods Accord, about 1 year before the end of the Second World War. So you've got a scenario where you've got artificial constructs, the birth certificate constructs, sitting on this monopoly board. The monopoly board is a trust. The trust is bankrupt. You've therefore got creditors and debtors. Everything on the monopoly board, all the artificial constructs are debtors. or the governments are debtors, or the companies are debtors. Everything on that monopoly board operates in debt. Debt is a negative, yeah? So everything on this monopoly board, this worldwide trust, is operating in debt. It's a debt-based system. The original bloodline banking families that operate as the creditors, the original creditors, in order for them to organize the modern slavery system, they had to bring in a bankruptcy trustee to regulate and to organize the debtors. And the debtors are all paying taxes. And the entity that they brought together is the United States Treasury. So the United States Treasury, aka the IRS, is the world bankruptcy trustee. Their job is to collect taxes from the debtors and retain it for the benefit of the creditors. Well, here's the good news. All of the living men and women, the living souls, are creditors to the bankruptcy of the worldwide monopoly board, this worldwide trust. And that's a significant point that's going to be a theme in this webinar and other webinars as well. So you've got a worldwide trust. It's operating in bankruptcy. The bankruptcy trustee is the United States Treasury, aka the IRS. You've got the original bloodline banking families as the creditors who bailed out the United States and therefore bailed out the rest of the world a bit later on. And then you've got the debtors, which is every single player piece on this artificial monopoly board, the governments, the companies, the artificial constructs, the birth certificates, all debtors, all artificial. Now, in order to finance the bailout and the bankruptcy, the original creditors took out a mortgage over the entire world monopoly board. And that system is commonly known as a usufruct system. So the entire monopoly board, this worldwide trust, is operating as in debt, and all of the assets, all of the land, all of the property, all of the infrastructure, all of the energy of the people has been mortgaged to provide the collateral for the original bailout of the United States on June the 5th, 1933. So whenever governments talk about balancing the budget, becoming more prosperous, what they're really talking about is getting further into debt as debtor entities, because they can't really become prosperous because the whole monopoly board operates on a debt-based model. Next slide. And because the United States dollar is the world reserve currency, everything kind of runs through the dollar. You've got the Bank for International Settlements, the International Monetary Fund, you've got the central banks, you've got the clearing banks, investment banks, the structure banks, all different types of banking entities. They all balance their books back to the dollar. There's talk about the BRICS, there's talk about cryptocurrency, there was talk about CBDCs, there's talk about stable coins. I put all these things in my treatise. The truth is, the reality is that majority of the securitizations, the securities transactions that go on in the world are all based in the United States dollar. That is very, very significant if you're looking to redirect taxes, signature credit recoupment, because it's all basically about the securitization of human energy, and all of the securitizations are pretty much going on in the United States dollar. It is the biggest player in the world markets. For those people who think that the Russians or the Chinese can get rid of the dollar, it's very, very difficult because of all of these securities transactions that are all going on in the dollar. So the world landscape is not only is the worldwide monopoly board, this trust, bankrupt, but it's all pretty much operating on the United States dollar, and mostly because, as you'll see as we go through, there's a lot of securitization going on, trillions and trillions of dollars of securitization, which is all really about the enslavement of human energy. Let's move it on, next slide. HJR 192, have a look at it. It might say on internet searches it's been repealed. Well, it can't be repealed because it is a permanent order. It will never, ever be repealed. If they repeal HJR 192, the whole world money system will grind to a halt straight away. Like in a snap your fingers, the whole world system would have to come to an end. They're never going to repeal House Joint Resolution 192. And it's because of House Joint Resolution 192 that the system of money exists. We have a system of money called money of accounts, whereas it used to be money of substance. Now the money system works on accounting ledgers. It's a money of account system. It's not real, it's artificial, it's ledgers, and it's all debt-based. And it all stems from House Joint Resolution 192. The entire world system, as I said, can't operate unless HJR 192 continues, because the world system is a bankrupt system. And this is what brought it into being, was the House Joint Resolution 192. Very substantial, very foundational, very important if you want to recoup signature credit and as redirected taxes. You couldn't do it without House Joint Resolution 192. Next slide. A lot of people have looked into where does the money come from? If you've ever asked yourself, you know, they talk about debt, the governments talk about reducing the deficits. It's total nonsense. It's impossible to reduce world debt. The whole system is based on debt. Every new transaction that you do, a bank payment, getting a loan, credit card, or a mortgage, is creating more debt. Every transaction is created what's called ex nihilo. So when you make a bank payment, you're not transferring money from your account to someone else's account. What you're doing is you're creating a new debt by making a bank payment. You're making a promise to pay in the future. You are not transferring anything. You're just creating new money of account. And this is what's mostly misunderstood. Professor Richard Werner, who spent 16 years studying this, writes all about ex nihilo credit creation. The Bank of England talks about it. The Federal Reserve talks about it. Basically, what is going on when you want to make a payment, when you want to enter into a debt, like getting a mortgage loan or credit card, your signature creates a deposit of human energy. So from the living soul, depositing human energy onto the monopoly board, this artificial worldwide bankrupt trust. And you're doing that through the player piece that sits on the monopoly board, the artificial birth certificate construct, which, by the way, is a banker under the Bills of Exchange Act of 1882. So through the banking entity that you are the agent for and the executor de son tort for, the player piece, otherwise known as the birth certificate or the person or the straw man, when you make a bank payment, when you sign up for a mortgage, loan or credit card, you are effectively transferring human energy onto the monopoly board as a deposit. That deposit is taken in by the bankers. The bankers hold it as an asset, and then they create a matching liability on the other side of their balance sheet, which is where the debt springs into existence. All of these debts that have been created, permanent being and perpetually being created, ultimately end up as securitizations. The investment banks trade this human energy in securitizations, and we'll talk about what they do later on and how they pay taxes on the use of your human energy, on mine, on everyone's human energy. And it is that tax that is their Achilles heel. It is that tax that you can redirect and you can recoup it because it belongs to you, the living soul, but you cannot recoup it directly. And I'm going to explain that a bit more, how that works later on. So everything on this monopoly board is debt. It's all sprung into existence through deposits of human energy. Even when the government says that they're going to inject new money into the economy, they are using the birth certificate constructs as collateral to create new ex nihilo currency. There is no money of substance. It's just ledgers. It's all debt based, and the debt is underwritten by human energy. Ex nihilo credit creation. Next slide. And it can't spring into existence without your signature. So your signature is like the contract. It forms the contract. It is the trigger point, the tipping point that makes the deposit of human energy work. The signature is actually the conduit for the transference of the human energy from the living soul that isn't on the monopoly board, can never go on the monopoly board, onto the monopoly board through the banking entity, the straw man, the person, the birth certificate construct, which is operating as a banker, issuing a negotiable instrument, which is a promise to pay in the future, all made possible because of the signature. No signature, which is really an intention to transfer energy onto the board. No credit creation, no ex nihilo credit creation could happen. No new currency could spring into existence. No new debt could spring into existence. The signature is very, very important. Next slide. And significant when we get a bit later on in the webinar, when we're talking about the bank's tax payments on human energy, is the fact that when you deposit your human energy onto the monopoly board, at the creation or the outset of that transfer, the value of that human energy is zero. You can't value human energy. It has no value on the monopoly board itself. But once it goes on the board and the bankers convert it into currency, convert it into debt, they add interest into the equation. And the future value of all of this ex nihilo credit creation, all of these deposits of human energy, create a big future value, which the investment banks trade. And that is what securitization is really all about. And I'll give you an example of this. If you were running a business and for 10 years you made a consistent profit, and the business was very stable, and you wanted to sell your business, an investor would look at it in terms of what is the stability of the profits each year, and if they believe them to be stable, they could offer 10 times, 20 times, 50 times the annual profit of the business. That transaction that I've just described is a securitization of the business. If you look at human energy, the bankers are securitizing the human energy because human energy, like mortgages, loans, credit cards, even bank deposits, have an interest attaching to them. The banks create a future value of this deposited human energy because of interest. And the investment banks are trading so if you take mortgages as an example, if you think of $1 million mortgage, which is created ex nihilo by the signature, by this transfer of human energy, think of the interest payments that the banks and certainly the securitization, the holders of the securitizations, which is the investment banks, you probably pay $2 to $3 million of interest on $1 million mortgage. So the future value of a $1 million mortgage is significantly higher than 1 million. It could be 10, it could be $20 million because of all the what's called hypothecation that's going on in the investment banking market. And the banks and particularly the investment banks, they pay taxes on the use of your energy, and it is those taxes that we are going to redirect and put into your Foreign Grantors Trust, which we'll come back to as we get through the next few slides. Next slide. So I've been developing signature credit recoupment or tax redirection for quite a few years now, and I call it the Clifford Protocol because it is a step-by-step protocol. You can read about it on the Ecclesia Law Institute. You can read about it in my treatise, and I step it all out as to how you can redirect these taxes which the investment banks are paying for the use of your human energy, and do it completely lawfully, completely in accordance with, and completely compliantly to all of the tax statutes, the Uniform Commercial Code, the SEC, everything that counts, perfectly in line with the Bills of Exchange Act, perfectly in line with House Joint Resolution 192. If you want to read the detail about how the Clifford Protocol works, read my treatise. There are other documents at Ecclesia Law Institute where I go into it in great detail. It's basically a financial engineering process that enables a grantor trust, a foreign grantor trust, to redirect taxes from the United States Treasury that they've already received into a foreign grantor's trust for your benefit as the originator of the signature credit at the outset, whether that was a bank payment, whether it was a creation of a mortgage, a loan, or a credit card. The Clifford Protocol is the mechanism to redirect those taxes into your foreign grantor's trust for you to use on the monopoly board, this artificial board, for spending and recouping. We'll come back to that a little bit later on as well. Next slide. So there's a 5-step process. Now, you won't be surprised, I'm sure, to know that the United States Treasury has a very sophisticated system that tracks every single event that's going on. All of this ex nihilo credit is being tracked. Ever since digitization came in many years ago, the United States Treasury has had a computerized system that tracks the creation of ex nihilo credit, who created it, which bank converted it, which investment bank is trading it, and most importantly, the taxes that are due to be paid on the human energy, these taxes which the investment banks are paying for the use of the human energy. The Clifford Protocol tracks the same things that the United States Treasury tracks: the creation of it, who created it, which bank was it created with, the value of it, where was it transferred to, in which securitization vehicle is it in, how much tax is being paid on it, and by who. Our system tracks the same thing as the United States Treasury tracks. The recognition of the signature event, the calibration of its value, which goes on the board at 0, but then has a much higher future value, and then the redirection of it is all made possible because of the Foreign Grantors Trust, which we'll come back to in a minute. Next slide. And in fact, we'll get into it now. So if you go on the internet, again, if you go into AI and you say, I'm interested in 1099 OID tax redirection, it's going to come up with, it doesn't matter what AI you use, by the way, it's going to tell you that that is a tax fraud. It's going to tell you that you can't do it. It's going to tell you that it won't work. It's going to tell you that if you get a check or some kind of tax redirection from the United States Treasury, that they might claw it back from you. It's going to tell you all of those things. And the reason why it tells you all of that, and it will also tell you that 1099 OID is only for the calculation of withheld taxes on financial instruments, like if you're trading bonds or securities or futures or something like this, which most people, of course, don't do. It's only the investment bankers that do that kind of stuff. What they don't tell you, what the AI and the internet doesn't tell you, is that every mortgage, every loan, every credit card, every bank payment generates withholding taxes, and the banks pay these withholding taxes on what's called their 945 tax modules, and it is specifically for human energy 1099 OID. The banks don't want you to know this. The Treasury doesn't want you to know this. The AI definitely doesn't want you to know it, nor does the internet searches. Now, the only way that you can recoup or redirect taxes is by putting a foreign grantor's trust onto the Monopoly Board. The reason why is because it is a way of separating from the person or the citizen, the straw man, this artificial birth certificate construct, which puts the signature credit onto the Monopoly Board. Remember, it's a banker, but the banking entity, the Monopoly Board player piece, the person, the straw man, the artificial birth certificate construct is a debtor entity. It has no rights to redirect taxes back to it. That's what the internet's talking about. That's what the AI is referring to. Debtors have no standing to redirect taxes. Only creditors can redirect taxes. So the Foreign Grantor Trust sits on the Monopoly Board, separate from the person, the birth certificate construct, the straw man, separate from it. And as soon as it files 1099 OID, it becomes what's known as the holder in due course. It becomes a bona fide creditor on the Monopoly Board that operates separately from the debtor entity of the birth certificate construct, the person, the straw man, call it different names, it's all the same thing. That is the game changer. Now the Foreign Grantor's Trust can sit on the Monopoly Board, can file 1099 OID, can file 1041, can file Form 56 as a holder in due course, as a bona fide creditor, entitled to the taxes which the investment banks are paying onto their 945 tax modules for the use of human energy. It is so significant. Without the Foreign Grantor's Trust, signature credit recoupment would not be possible. It would be an unlawful act because debtors cannot redirect taxes that belong to creditors. Only creditors can redirect taxes. The Foreign Grantor Trust is a creditor entity. And the reason that it's not easy to get a Foreign Grantor's Trust is because the IRS don't want to hand them out very easily. You can't go online and get a Foreign Grantor's Trust. You have to do it by phone call or by faxing. They simply don't have any electronic automated way of getting an EIN number for a Foreign Grantor's Trust. They make it difficult. The Foreign Grantor's Trust is foreign alien to the United States system. It's an international trust. It is if you like, it's like an independent nation, all in its own right. It is perfect for redirecting the taxes, which is why in 2024, when I was doing my research on how could we find a trust entity to file 1099 OID that would never be clawed back, the tax redirections would never be clawed back, that would enable the tax filings to sail through the IRS's algorithmic systems, their gates and their checkpoints. And I came across the Foreign Grantor's Trust. It was a major eureka moment in my Clifford protocol design. The key is this: holder in due course. UCC 3302. That there is the game changer. That makes the signature credit recoupment possible. Without the Foreign Grantors Trust, it would not work. It is so significant, and stands the Clifford Protocol. One of the reasons why it stands the Clifford Protocol completely differently, separately from all these other schemes that people have tried in the past that have got themselves into trouble. And those schemes are the ones that the AI systems are talking about. Those schemes are the ones the internet is talking about. The internet won't talk about the Clifford Protocol or the AI will not talk about it, because it knows that it is the pathway out of the maze. If you think of it like a maze, and I've found the way out of the maze, no AI system is ever going to tell you the way out. It wants to keep you in modern slavery. So it's going to tell you 1099 OID is unlawful and it doesn't work and all of these things. I'm telling you it does work. In 2025, we had $600 million worth of confirmations. In 2024, we had multiple people receiving checks from the IRS. It works. Next slide. The IRS have this algorithm, and they basically check a lot of things before they will release the redirected taxes. They will be checking the creation of the signature. What is the signature event? What's the value of that signature event? Which securitization vehicle is the human energy held in? How much taxes has the payer, that's the investment bank, paid for the use of the human energy? Is the recipient of the redirection of the taxes entitled to it as a creditor? That's the Foreign Grantors Trust. It will look at all of these things, and if there's anything in there that doesn't tick the right box, the 810 algorithm will stop that signature credit recoupment from happening, or that tax redirection from happening. The key is to make sure that everything has been verified before a 1041 tax return is filed. The amount of the signature credit or the tax redirection is correct. There's enough taxes being paid on the payer's 945 tax ledger, that's the investment bank's tax ledger. The CUSIP number, that's the securitization reference number, is correct. The calculations of the redirected taxes the amount that's looking to be redirected doesn't exceed the amount funded by the payers, the investment banks, all of these different things. And the Foreign Grantors Trust has genuinely been set up as a Foreign Grantors Trust as the holder in due course and the lawful recipient of the tax redirection. If you can tick all of those boxes, which our system does, it should get straight through the IRS's 810 algorithm, which is there to stop signature credit or there to stop tax redirection, but not if all the boxes are ticked in the right way. And our system verifies all of these things before the 1041 is filed, which is the ultimate tax return that draws down the signature credit redirection. Next slide. Now, what happens is the investment banks, they underfund their 945 tax modules. It's quite interesting. I've published a report on exactly how much tax each of the main investment banks have paid on their 945 tax modules. The 945 tax module is the taxes on human energy. It is the original issue discount taxes on human energy. The banks typically underfund their tax modules and pay taxes on other tax modules. One of the reasons why the Clifford Protocol is verified is that in Revenue Procedure 2002-2026, it gives the Foreign Grantors Trust the right to move taxes from other tax modules of the taxpayers, that's the investment banks, onto the 945 tax module. Now, why would they provide a revenue procedure 2002-2026 if they weren't giving the holder in due course, the Foreign Grantors Trust, the right to move taxes from other payers' modules, tax modules, onto the 945 module? This is the smoking gun that the investment banks really don't want you to know about. In fact, the investment banks, through the Depository Trust Company, DTCC, they disguise the taxes that they pay on their 945 tax modules by calling the module a different name. It's called a street name. They invent a name. So they pay taxes, but not from the name of the investment bank. They invent another name to try and disguise the taxes that they're paying on human energy. But Revenue Procedure 2002-2026 is the ratification, if you like, of the Clifford Protocol, and the Foreign Grantors Trust has absolute right to move taxes from the other tax modules onto the 945 tax module, and from that tax module into tax redirection. It's called Trias 310, which is the banking side, the electronic transfer of the redirected taxes to the Foreign Grantor Trust bank account. Next slide. So I've gone into a little bit of the technical side. There's a lot more in my treatise if you're interested in looking at all the technical side of this. In order for you to play the game of Monopoly and win it, you need three components. You need the Envoy Protocol, the Asset Fortress Protocol, and you need the Currency Creation Protocol, which basically is the Clifford Protocol. The Envoy Protocol puts you in a position where you are operating as the occupant of the Office of General Executor over the decedent estate, which is the birth certificate construct. It enables you to take up the right standing. It enables you to rescind the agency where necessary. You can't get rid of the agency, but you can rescind it. And you also become an envoy for the Republic of Old Souls, which is very important for standing. That's the Envoy Protocol. The Asset Fortress Protocol is a Foreign Grantors Trust that you're going to be using as your private treasury. There are, in fact, two Foreign Grantor Trusts. There's one that is going to be filing the 1099 OID and receiving the tax redirections. That trust will finance by transfer to your Asset Fortress Protocol, which is a second and separate Foreign Grantors Trust, is under your control with a bank account that will act as your private treasury. So that's where you'll be spending your redirected taxes. You'll be spending just like you do now, with a bank card, with bank transfers, no different. And you'll be able to avoid digital ID traps by using the Asset Fortress Protocol private treasury. You'll also be able to transfer assets, the title of assets, into your Asset Fortress Protocol and take more control over the assets. You, the living soul, are the beneficiary to the Asset Fortress Protocol. You never step on the monopoly board. You use the Asset Fortress Protocol private treasury for your spending. And the good news is, because spending from the Asset Fortress Protocol is the creation of new ex nihilo credit, signature created, you spend it and then you can recoup it in cycles each year. So if you were recouping or redirecting $2 million per tax year, and you're using your Asset Fortress Foreign Grantors Trust to do it, you will be able to spend and recoup per year $2 million. There is not a limitation as such, but in the algorithm 810, there is up to 2 million without manual review. We don't want to get into manual reviews of signature credit redirection or tax redirection. So up to $2 million per grantor trust, per grantor. If you're married, that's $4 million per annum that you would be able to spend and recoup. Recoup initially, spend and recoup, and you'd have 2 foreign grantor trusts, one for husband, one for wife. Or if you're in some other kind of partnership, you can both have a 2 million limit or 2 million safe limit, if you like, per year. Next slide. So Asset Fortress Protocol, a foreign grantors trust acting as the private treasury, the Envoy Protocol, which is all to do with occupying the office of General Executor. You're also declaring that you are alive, because in the Sesquivet Act of 1666, the state presumes that you're lost across the seas and dead. So the Envoy Protocol corrects that. You become an envoy, but you also occupy the office of the General Executor over the decedent estate, which enables you to control the agency. You can't get rid of it. You don't want to get rid of the agency, but you can take more control of it. And the currency creation is employing the Clifford Protocol to redirect the taxes into your tax filing grantor trust. Remember, there are 2 grantor trusts, one for tax filings, one for private treasury. That's all part of the currency creation model. You need all those 3. We call it the monopoly game changer, because you don't really need anything else. If you've got those 3, it will enable you to solve just about every problem on the Monopoly Board of Commerce and give you the lifestyle that you want and you need, and I'm sure you deserve. Next slide. For those who want to see proof that it works, there is a video on ROS Media channel where Andy Benson is interviewing Angela, who heads up our technology side of our organization, and they are showing you wages and tax transcripts confirmed that's gone through all the IRS's checks and balances, confirmed wages and tax transcripts from 2025. There's also multiple checks that were distributed in 2024, and the ex-head of our tax department, Lisa Griffin, who used the Clifford Protocol, got her signature credit tax redirections in around September of 2025. There is a reason why 600 million wasn't funded out to our members. There was a major sabotage event. I've spoken about it in great detail. There are interviews about it on ROS Media. I've sent memorandums. I've sent all sorts of membership communications. I'm not going to go into it. There is an investigation into some pirates who undermined that 600 million. There's a lot of reasons why they did it. It's all in my interviews. The point is that the Clifford Protocol has been proven to work, and that's what the takeaway is from this slide. Next slide. And probably the best part of the Clifford Protocol is that once you've recouped up to 2 million in the first year, you can spend that through your private treasury and recoup it again. Spend it and recoup it. So those infinity loops mean that you don't need to go to work. You don't need to run the business that you might not enjoy anymore. You can just spend and recoup your signature credit in year by year. So if you think about it, if you've got another 40, 50 years playing this game of Monopoly, at 2 million a year is your budget, you could be talking about this program being worth $100 million to you over the next 50 years. Could be worth more if you're younger. Next slide. Some people have asked me, and I've gone into this in great detail. In fact, I wrote a whole technical paper on it. Would the redirection of taxes bankrupt the United States Treasury? And the economic reality of this equation is the answer is absolutely no, because every government creates credit ex nihilo. They don't need taxes to finance the economy. It's a con. It's a deception. They create ex nihilo credit. The central bank and the treasuries all around the world create ex nihilo currency. They do not need taxes. They don't need to run the economy on tax collection. They just use taxes as a slavery model. If you took 50 to 100 billion of taxes that the investment banks are paying the United States Treasury and redirected all of that to foreign grantor trusts, it would make no difference to the United States economy whatsoever, because they would just carry on creating ex nihilo credit. That's what the Federal Reserve is for. The Federal Reserve is there to between the Treasury and the Federal Reserve. They can print as much ex nihilo credit currency as they want, as they need to finance anything they want. They've been doing it for 100 years. Taxes makes little or no difference to that equation. Next slide. Now, I want you to think about, you won't know all these figures, but I want you to think about, what is the biggest signature credit event that you've had so far? Is it the creation of a mortgage? Is it more than one mortgage? Is it a loan? Was there a year where you paid out from your bank account a large amount? Think about those amounts. If you can think about those amounts and you can get somewhere near 2 million or even 1 million, that is what you will be using when you have a consultation with one of our consultants, because we have a calculator in our platform that will enable you to put down the name of the bank that you created that signature with, whether it was a mortgage, a loan, whether it was more than one mortgage, whether it was bank payments. Just think about what are the largest events that you have transferred your energy onto the Monopoly board. More in most cases, for those people who've had mortgages, it's mortgages, because the face value of the mortgage is the signature tax value that you'll be redirecting. So if you've had more than one mortgage, they've got to go on the list first. If you've had high prosperity in the past from the age of 18, pick a period from the age of 18 where you transferred out of your bank accounts large amounts. Try and remember the name of the bank. Try and remember roughly what the amounts were. Add all those things together. That is your 2 million target, or try and make up your $2 million target. If you can get somewhere near it, that's what you'll be discussing with the consultants if you want to enroll and want to get this started. And remember, it's husband, wife, or partners that can do this. You can even bring your kids in if they're over the age of 18. You can bring your friends, your family in. They can all be doing this. You can be using my avatar if you want to share the avatar, which will be made available very, very soon. It's in beta testing at the moment. If you want to spread the word, that's the way to do it. Next slide.
And here we are with the top 7 questions. Well, what an awesome webinar. And thank you so much for the information that you shared, Ian. And I know others have enjoyed it as well. These are some of the comments I've noted. One person says, I love how clear and understandable these webinars are. Thank you, Ian. Someone else wrote, gosh, epic information going into detail. So interesting. Gosh, Ian is on another level with his knowledge. Amazing work, Ian. Another comment here. Good morning, Sims. Well, good morning to you, young lady. Yeah, another truly amazing webinar from our own genius, Ian. Thank you all so much for your courage, hard work, and efforts. Truly appreciating this life-changing information. And yeah, more comments are coming through saying thank you very much. But let's dive into the questions. Are you ready, Ian? Let's go straight in to question number 1. So, how did the passage of House Joint Resolution 192, also known as HJR 192, in 1933 establish a usufruct relationship where the living populace is presumed to act as a liable surety for a bankrupt corporate debtor construct? That's a tongue twister right there.
Yeah. So what happened is the bloodline bankers, they wanted to take control. They wanted to have a system which they could expand the money supply, and the only way they could do that was to bring in money of account. So they had been planning this for a long time before. This isn't just something that happened in 1913 when the Federal Reserve Act came out, or even 1933 when House Joint Resolution 192 came out. They'd been planning it for a long time before. They had to create this debtor and creditor environment. They obviously wanted to be the creditors because they are like the masters of the universe, the bloodline banking families. So they had to make the United States bankrupt, and they did that by offering to bail out the federal government in 1933 in exchange for taking collateral for their bailout. So their bailout was then secured on the birth certificates, the human energy, secured on all the land and buildings and property and everything else, because that's the only way that they would bail out the United States. So the usufruct system uses the fact that each birth certificate is registered to the state. The state then lodges that with the United States Treasury in the bankruptcy. So that any economic activity that's going on is now owned by the or as surety, as collateral for the bankruptcy. So everything that's going on now is usufruct, meaning that the assets have been hocked, they've been mortgaged by the creditors. And that's really what happened in 1933. And it enables more currency to be put on the monopoly board, knowing that the debtors, which is the birth certificate constructs, have no right to recoup or take back taxes or even operate with any kind of control, because they're being controlled in a usufruct system. The only way that you can control the monopoly board is through a living soul putting a new player piece on the monopoly board, which is the Foreign Grantor Trust, as the holder in due course. But the usufruct system is basically, that is the modern slavery system. And the surety, being the living man, woman, the living soul, is the underwriter, the surety, the guarantor, the liable living soul for the birth certificate construct. That's where all the problems are, is in the agency and the surety, acting as surety for the birth certificate construct, which is registered to the state. They've got ultimate control of it. It's a debtor entity, and it's what enslaves the living soul through the agency.
Thank you so much for that. So question number 2. Under the provisions of the Bill of Exchange Act 1882, how exactly does the biological signature of the borrower act as the primary monetization event that allows commercial banks to create book money ex nihilo?
Well, the signature is like it's binding a contract, it's forming a contract, it's a promise to pay in the future. It's the transference of this human energy. Without the signature, there would be no contract. The Bills of Exchange Act says in it that a body of persons are bankers. Well, persons are straw men, persons are the birth certificate construct. So the biological signature, that's the signature of the living soul. That is the pledge of human energies through the signature, and where the signature is actually transmitted by a banker, and bankers can issue securities, bankers can issue debt, bankers can make deposits of human energy. So it's a combination of the living soul, signature, through the banker, the artificial birth certificate construct, to a bank, one bank to another, one bank depositing, that's the birth certificate construct, the other bank receiving the deposit and then creating the debt through their accounting exemptions which they've been given, and then they sell that debt to the securitization market where the investment banks pay the taxes on their 945 tax modules. So it's basically, it's the signature is the contract, it forms the contract of promise to pay in the future.
Lovely, thank you for that. Question number 3, excuse me. According to the nominee reporting mandates of IRS publication 1212, why does establishing initial issue price of 0 dictate that the entire face value of negotiated instrument is classified as an original issue discount, which is also known as OID?
Yeah, it's a great question. The OID, you see, securities which have an interest rate attached to them. So if you think of it like a business has an annual profit. If you want to buy a business, you've got to pay a multiple of the annual profit. A security that has an interest rate attached to it is just the same. It has a future value which is far in excess of its issue value. The issue value is 0 because it's human energy. The future value is the value of all the interest that's going to be paid over the lifetime of the security itself. So all of these mortgages, loans, credit cards, and even bank payments have an interest rate profile attached to them, all have a much higher future value. It's that future value which is discounted back to the current year, which is what the banks are paying taxes on. That's their 945 tax modules. They're paying taxes, that's the investment banks, year by year for the use of the human energy, which has a high future value, discounted back to the current year, taxes being paid on the 945 tax modules, which is the giveaway, which is what they really, really don't want you to know about. That's why they call these 945 tax modules. They give them different names from the names of the investment banks.
Lovely, thank you for that as well. And also I'd like to say thank you for everybody who's putting their questions in the Q&A section as well for Ian to answer next week as well. So let's continue with these questions. Number 4. So why does attempting to claim an OID refund using a retail social security number, also known as the SSN, automatically trigger the automated information return document matching system to issue a process status 77 and a transaction code 810 freeze? God, these are right tongue twisters today, aren't they?
They are, yeah. There's somebody very technical writing these, I'm sure. So, the debtor, the birth certificate construct cannot, has no entitlement to redirection of taxes. It's as simple as that. The social security number is a number, it's a reference number for the debtor being the birth certificate construct. So, if the IRS sees 1099 OID being filed by the debtor entity, then they're going to freeze it. Their IRDM system, their automated system, is going to see that straight away. On the 1099 OID, you've got to put down the recipient and the recipient's tax reference number. So if the recipient of the redirected taxes is a birth certificate construct with a social security number, the IRS system is going to block that straight away, because debtors aren't entitled to tax redirection. It's as simple as that. Only creditors that can take up the position with holder in due course standing can redirect taxes.
Lovely. Thank you for answering that question. Question number 5. How does the specific utilization of the 98 series Foreign Grantor Trust and the filing of the IRS Form 56 establish the beneficiary as unaccessible holder in due course under the UCC 3-302.
It's all based on a publication called IRS Publication 1212. It says in there that if an entity, it doesn't actually say it in these words, but it means this. If an entity that could take up the position of holder in due course as a creditor entity files 1099 OID under the UCC 3-302, it is entitled to the taxes that have been paid on the financial instruments, which is, for example, mortgages, bank loans, credit cards, bank payments, that the payer is paying on their 945 module. So it's basically saying, what is the entity that is filing the 1099 OID? If it is an entity that can become the holder in due course, i.e. it's not a debtor entity, which in the case of the Foreign Grantor Trust, it's not a debtor entity, then it can take up the holder in due course status and it qualifies under UCC 3-302. It's all about, basically the title of this whole webinar is about the Foreign Grantor Trust taking up the position of holder in due course, because it can. Because it's not a debtor entity, it's a creditor. It's a creditor entity.
Lovely, thank you for that. Question 6. By what legal authority does a manual fiduciary command invoke Revenue Procedure 2002-26 to forcefully reallocate a nominee's bank's Form 1120 corporate surplus into their underfunded Form 945 withholding module?
It's basically Revenue Procedure 2002-2026. It's all in there, and it's UCC, it's Uniform Commercial Code, which is all to do with the treatment of the legal treatment, because it's a monopoly board, it's artificial treatment of securities. The Revenue Procedure 2002, you can go and look it up if you want to go and look into it in detail. It's basically it's a paragraph in the tax manual that complies with the Uniform Commercial Code, that if a creditor entity files Form 56, the creditor entity, a holder in due course, can actually command the United States Treasury to move taxes to the 945 tax module as if it were the taxpayer, because it can file the Form 56, which is a power of attorney. So the Foreign Grantor Trust becomes the attorney in fact for the taxpayer, with full rights to move taxes from other tax modules that they've already paid onto the 945 tax module. And by the way, this process doesn't cost the banks any more in taxes. It's just redirecting taxes that they've already paid. So nobody goes to the banks and says, hey, there's been a load of tax redirections filings come in, you need to pay more in taxes. No, all we're doing is redirecting taxes they've already paid onto the 945 tax module.
Lovely, thank you for that. And question number 7. How does the extraction of the 26-digit information returns master file reference string serve as a ledger verified proof of a perfected nominee correction? And how does keeping the individual claims under the $2 million US dollar, so I'm making that clear, US dollar, successfully bypass the Joint Committee on Taxation review?
The interesting thing about the information return master file is that they've got a file on everyone. Every single birth certificate construct has a file of exactly how much signature credit it's created, when it created it, and with which banks. It's quite extraordinary. If you look in my research papers, I break it down is a 26-digit reference number that breaks down. It's a bit like the Enigma code. If you've ever watched the movie The Imitation Game, it's like a whole series of letters and numbers that determine exactly what happened, when, and who with. Right from when digitization came in many years ago, that's what they're doing. And when they're looking at the signature credit up to 2 million, they're using an algorithmic system to check everything out, to verify everything ticks the right boxes. But if you go over 2 million, then you're going to be into this joint committee in taxation. You're going to be having the filings reviewed there. Now, the likelihood is that we would win, because what we're doing is 100% in accordance with the law. But I just don't want to have lots of manual reviews going on. And it's my opinion that I don't know of any of our members that can't live on $2 million a year. I think it's like 5,000 a day. And if you can't live on that, well, you shouldn't really be coming to these webinars, because our webinars are really about carving out freedom and building our independent freedom community.
Yeah. Well, thank you so much for that. And well, let's go on to the next slide. But as I said, I'm seeing lots of comments already come through in the Q&A section. And don't forget, they will be collated after today's webinar. They will then be sent off to Andy, and Andy and Ian will be doing another session and answering those questions. So watch out for an update when that will be live and available for you to watch. So Ian, I've just gone on to the next slide for you. And let me just do that, because answering a quick question for someone. Okay, so let's go into the polls. So over to you, Ian.
Well, I mean, I think if you can read them out, and I'll be the DJ if you like.
Okay, so poll number 1, do you want a consultation to discover how to proceed with the Monopoly Game Changer protocol? So this is for those who actually want to take action and to proceed. So let's just click on the start button, and if you can start voting now. So if you would like to get started, or maybe you are already doing this as well. Let's have a look here, all coming through. So let's have a look here. Give it a bit more time. So I know here, if, the options are yes, you would like to get started, or that you are already doing this. That's available to you right now. So what I'm going to do, give it a few more moments. Let's get a few more votes coming through. And then I will start to come to a close. So 5, 4, 3, 2, 1. And the result is 46% have said yes, they would like to get started. And 53% are already doing this as well. So thank you so much for voting. Let's go back to now to poll number 2. If you are one of the members that received a IRS wages and tax transcript in 2025, that's the $6 million, do you want to upgrade and include a signature credit recoupment from the age of 18? So if you like to start voting, if you'd like to upgrade, then just share yes. Or you may not be at this moment ready to upgrade, but I know I'm seeing messages coming through. So if you would like to upgrade, then just click yes as well. Thank you. like that, don't you? The Great Escape.
Oh, yeah, that's very, very appropriate.
Yes. I still haven't watched that film.
You really must.
I know. It's there. It's all ready for me to watch. Right, let's get a few more votes coming through. And I'm going to start drawing to a close in a moment. So 5, 4, 3, 2, 1. Thank you, everybody who took the time out to vote. So 64% said yes, I would like to upgrade, and 35% don't want to upgrade at this moment in time. So I'm just going to go back now, and the last poll, which is, if you are not already doing signature credit recoupment, do you want to do it as part of the Monopoly Game Changer protocol? If you'd like to start your voting, that would be great. Thank you so much. Also, again, thank you to everybody who are submitting your questions for next week. I think you're going to have quite a lot of questions to go through next week, Ian. Very exciting. Right, and I'm going to start to draw to a close. Just give it a few more seconds. So 5, 4, 3, 2, and 1. So 82% said yes, I would like to get started, and 17% not at this moment in time. Ladies and gentlemen, thank you so much for voting. And what I'll now do, Ian, I'll go on to the next slide with, and also if there's anything else you'd like to add as well.
Well, this is where you can book a consultation and get into how much can you put down for your signature credit tax redirection. And in between now and then, I would urge you to think about what is the high value signature credit events that you've had. If you've ever had mortgages, think about those first, because they're probably more than your bank payments. But that doesn't mean you can't say you can't add bank payments as well. But if you've had more than one mortgage, many people have had multiple mortgages in their time, put them in first, because they are going to absorb the 2 million limit, if you like, quite quickly for some people. And from a tax redirection point of view, it is likely that the taxpayer, the investment banks that are paying the taxes, they will be there'll be a lot more other taxes that we can transfer onto the 945 tax module, because the big investment banks are the ones that are operating and securitizing the mortgages. So prioritize mortgages, then move into loans, credit cards, and bank payments. And I'm sure that many of you will be able to get up to 2 million if you start thinking about it now. If you want to book a meeting, click on the link. I think the link's in the sidebar, is it, Sims?
Well, the link, actually, we did a little bit of a test a couple of days ago. So you can actually, if you get your cursor and click on that link right now, click on it, it will take you to that page, because we actually did a test and someone did it. So you can actually book immediately. So go ahead, click on that. But of course, the automated email will be sent out to you with that link. An additional email from our marketing team will also be sent out with that link as well.
Yeah, and it's quite likely that next week we'll be sending out a link to the avatar as well, because we put it out a few days ago. Some of the advocates have been using it. There was a lot of good feedback and a couple of things that we needed to adjust. Next week, I expect that we'll be sending out the Ian Clifford avatar, and you can ask all different questions to that. And then if you want to also book a consultation, there's a link within the avatar that also enable you to book in with a consultant, and you can go through your calculation and then you can start the enrollment process. So 2 ways to do it. You can either click on this link, or you could wait for the avatar to come out. I'm not sure which day that's going to be, because there's a bit of IT work to do, but it will be at some point next week that the avatar will come out. And then if you want to earn the reward points, if you remember I spoke about, you can send the avatar to others and get $100 in reward points that you can use to set off against the donation value of any protocols, the Monopoly Game Changer and any other protocols going forward. And it's the easiest way to spread the word. And do you want to just talk about the advocate side, Sims? Because I think the avatar's a bit of a game changer there, isn't it? So.
Oh, it's huge. And firstly, I'd like to say thank you to all the advocates who have been testing this. Now, I know a few people have said, oh, I didn't receive the email. Check your spam just in case it's popped in there. But we have had amazing feedback. We really do appreciate it. Also, thank you for your critique as well. We want to ensure the improvement of that, it continues to work, as Ian's just mentioned, with our tech team. So I want to say thank you so much. But as you know, when you share your webinar referral link, that's the advocate webinar referral link, and also the avatar as well. So when you share that out, when someone registers, so I think on the avatar, they need to, if I believe it's about a 5 or 10 minute time frame they need to speak on there, and then once or use it, then once they register, you will receive $100, which will go in your wallet. And of course, I know many advocates have been sharing their webinar referral links as well. And if your referral watches a minimum of 70% of the webinar, like for example, I see we have a new person from New York. So welcome to today's webinar. So that individual may have been referred by an advocate. And if that individual watches minimum of 70%, then that advocate will receive, again, $100 in their wallet as well. So, and I know a lot of questions have come through that I get on a daily basis. What I'm also looking to do is a weekly Q&A. So Andy Benson are asking your questions to me, and I will be answering them as well. And that will be available on the Ross Media platform. Also, that's going to be available on the Ross platform. The platform, as in when you log in as an advocate, and also it's going to be fed into the advocate avatar as well. And of course, you know, the more referrals you bring in and the more that the referrals watch any of the webinars, then of course, if you're looking to, you know, a lot of people said they're looking to upgrade to their signature credit, where you can use those credits as well. So, but all that information is on there. And yesterday when I did the webinar with Andy, I actually demonstrated how you can find your webinar credits as well. And coming soon, of course, because we're still doing a few more testing, you'll be able to find out your credits you've achieved through the avatar as well. I think I've covered quite a lot there.
Well done. Well done.
So there you go. Had I missed anything else out? I'm trying to think if I missed anything out. It is a lot to cover. I don't want to take over, but all I say is watch out for my Q&A session. So any questions that you email to me, I will be answering, because remember, as I've always said, people learn from other members' questions as well. So yeah, hope you enjoy it anyway. Be coming soon. Anyway, Ian, I've gone to the next slide with all the other links that are available as well.
Yeah, there's a whole range of information for those who like to understand the subject more. I've done a I've done a video just recently, a video interview with Andy, the Monopoly Game Changer. If you really want to get deep into technical, I did the tree ties. That's also on the Ross Media platform, which is what you can see there. Watch the tree ties preview videos. So we've got all of our webinars, past webinars, if you want to replay any of those. Telegram channel, I urge you to get onto the Telegram channel. We have a lot of people in there now. I'd like to get more and more people in there because we are posting information all through the week on the Telegram channel, and a lot of people are, I think, getting benefit from that. If you want to sign up for my technical papers free of charge, we have a platform. It's a bit like Substack, but Substack actually banned my content because it doesn't want you to know. So we use a platform called Ghost. It's like Substack. And then you've got the various other Telegram channels. And I think you've got a channel as well, haven't you, Sims, for the advocates, which
yes, I have. And yes, we have. It's right down the bottom there as well. So you could actually click on that and you can join. Now, what we include in the advocate Telegram group, because a lot of advocates come to me and say, look, Sims, we want to share the webinar referral links. And sometimes they may get a little bit stuck on what wording to use. What's the correct terminology? Well, guess what? All those wordings are available on the Telegram group. So you can use that as well. Plus, I do send weekly emails. So, for example, next Saturday's webinar that will be coming soon, you will receive either Monday / Tuesday an email to inform you that your advocate webinar referral link is live. Plus, there is an email template as well. Now, even if you're not emailing it out, use some of the content, use some of the information that will resonate to you and also to your friends, your family, or your network. Because I know a lot of you also use social media like your Facebook pages, TikTok, Instagram, etc. as well. So, if you want to know about wording, what to use, join the Advocate Telegram group. All that information is there. There you go.
Good.
Handouts.
Oh, I think you flipped over 2 slides, huh?
Oh, did I? There we go.
Handouts. Yeah. There you go. I mean, the nature of and subject today, I've written a technical paper on it. You know, why is it possible? Only possible through Foreign Grantor Trust. The tree ties, much deeper, much more technical. But I think it would be one of the most popular papers that people read. If you want to start off with more of a beginner's paper, then the money system explained, which I wrote a few weeks ago, that's also very popular. Nobel Prize candidate, one of our members said this process should win could it win the Nobel Prize? So I thought I'd jump on that. That's a good accolade to have. How you can enroll at no cost? Well, that's by using the avatar and the webinar awards scheme. If you really want to get started but have no budget at all, you can make referrals and use the referrals and the credits you get from referrals to get your enrollment. And the banks are debtors to you, which is an interesting paper, which sort of flips the whole thing on its head, all the things that most of us once believed about banks lending money. That's a whole paper on how the banks use our energy to create the debt, how they are themselves debtors. Even the richest banks in the world are all debtors to the bankruptcy. It's all explained in that last paper.
Lovely. Thank you so much for that. And just to remind you, all the links that have been shared today on the screen, some you can click, but I believe looking at comments, you're unable to. As I said, everything will be emailed out to you. Okay, so about 2 or 3 minutes after this webinar will finish, an automated email will be sent out as well. And on top of that, an additional email will be sent with all that information, plus a link. And that link are for the additional questions. So even though a lot of you have put your own questions that you want Ian to answer for next week, in case you finish, give it a few hours or even give it to tomorrow and you go, I've got another question I want to ask Ian. Well, go back to that email, click on the, it's a jot form, and add your question in that, because they will be sent to Andy, and Andy will be asking your burning question to Ian as well. And also your feedback is really, really important. Thank you so much. I see more feedback coming through, so thank you for that. But also on that link, add your feedback onto there as well, because we just want to make sure that you get a great webinar experience on here as well. And also, how can we improve? It's all about improving. But from seeing the feedback so far, I think everybody's loving so far today what's going on. But yeah, anything else you want to add on the Q&A? Are you all good there?
No, just we just want to get more people watching it. We are going to be breaking it out into chunks, so question by question. So if you've got a particular question that you asked, you soon will be able to, underneath the video, click on the question that you asked, rather than wading through the whole Q&A, because they go on about an hour and a half to 2 hours. That's going to be made possible. I think YouTube is going to enable us to do that. So the media guys are working on that, because of you may only have one question that you want me to answer, and you may know the answers to the other questions. So you'll be able to pick out the question that you asked and click on it and get the answer. And also in the avatar, these Q&As are being loaded into the avatar, so you should be able to ask the avatar as well.
Lovely. Thank you so much for that. Let's just have a look. Have we got another slide here? Yeah, and of course, thank you for attending and joining today's webinar. It had a very international flair, didn't it, today, Ian? Because we had, as I said, everyone from New Zealand, Australia, going over to Europe, UK, Ireland, over then to USA and Canada, and I'm sure I've missed a country out somewhere. If I have missed anyone out, I do apologize. Oh, Hungary and France as well. We included that. So thank you so much for attending today. As I said, a link will be sent out to you guys. Your feedback is important. We do listen to what you say. And of course, every week we constantly want to improve these webinars week in and week out. And, we do value your feedback as well. And even a short message makes a huge difference. Just to clarify, this webinar is being recorded and it will be uploaded onto the platform as well. Also, there will be replays. There will be an invitation to the replays. I've just seen something that's just come through. Maybe some of your referrals were unable to attend live. Don't worry. Tell them to watch out for that email invite. By them going onto the replay as well, as long as they watch a minimum of 70%, you will qualify for that $100 credit into your wallet as well. And as long as if they do watch it on the platform, as long as they do it within 14 days. So there is a window of 14 days, which I do explain on my Q&A section with Ian. With Andy yesterday, but I'm sure there could be a Q&A session with Ian one day as well. Anything else to Ian? Any final words before we finish?
My final thoughts are that I want, once the avatar comes out, I want everyone to have a go on it and then spread the word. We're going to build our freedom community through referrals. The avatar is, I think, the best way of doing it. And next week, I think I'm going to go into more detail about the 945 tax modules, because this is what they really don't want you to know about. So I think I'm going to do that, expand on that a bit more, and how you can actually use the information if you wanted to get your mortgage discharged. So not only recoup the signature credit connected to the mortgage, but use the fact that the investment bank that's holding the mortgage note is paying taxes on their 945 tax module, kind of makes them the debtor. and they don't want you to know that. So I think I'll go into that in a bit more detail, because a lot of our members have got a mortgage. So
Yeah. Wow. And I think we've had feedback, people wanting you to do that particular webinar as well. So I think we'll see a lot of attendees next week. And also, if you know anybody who think they need to listen to that particular webinar next Saturday, well, guys, you know what you need to do. Your webinar referral link will be available on the platform. Keep checking and go and share that link out, because that I know has been one of the requested webinars for you to deliver. So make sure they don't miss out as well. So on that note, ladies and gentlemen, thank you so much for taking the time out, coming on today's webinar. Great to see so many of you. Great to see familiar faces, to my lovely advocates as well. And also to our new members, and welcome to you as well. And Ian, again, thank you so much for your time. Everybody's been loving this information. Someone even said best one so far. Everyone always says every week, oh, we thought that last week was good, but this was even better. So can Ian top next week? Well, the only way to find out is make sure that you attend next Saturday. And also, any friends or any family or any of your network you think they should listen to Ian, then you know what you need to do. Just share your webinar referral link. And on that note, take care. Have a wonderful weekend and goodbye.
Bye for now.